Good morning to everyone. I would like to acknowledge the presence of our esteemed delegates, our Director of Ceremony, Andy, Guest Speaker, Deputy Governor of the Reserve Bank, Dr. Innocent Masha, the board members from First Capital, our partners at Alpha Media, led by the board chair and of course the CEO, Kenyas, industry captains, bank CEOs, associates, fellow dignitaries, our valued customers and clients, and those who are following these proceedings. I welcome you to the 2024 Bank and Banking Survey. It is my pleasure to be here, and it's also my honor on behalf of First Capital to be once again the sponsor partner for the Zimbabwe Independent for the 9th consecutive year, a privilege we do not take for granted. The theme, weaving through a dynamic liquidity terrain, challenges us to continuously seek opportunities to minimize the impact of evolving market conditions on our stakeholders, businesses, and to strive for sustainable growth. Whilst the banking sector has faced challenges emanating from both exogenous and endogenous factors, including liquidity constraints, I believe we have risen to this occasion, and I hope our guest of honor will confirm that. As an industry, we have stayed afloat, adapting to circumstances with resilience and determination. As we approach the end of the year, let us pause to acknowledge our collective achievements. We have continued to stand tall as an industry, contributing effectively to our economy. We have delivered scalable banking solutions with agility and efficiency. We have seen sustainable profitability and organic growth. We have collectively maintained adequate capital levels and satisfactory asset quality, including remaining stable as a sector. As a bank for doing business, First Capital remains committed to being a trusted partner in driving economic growth. Through innovative financing and relevant digital banking solutions, we aim to create a sustainable banking model that promotes financial inclusion and offers solutions to all. To this end, we have forged strategic partnerships to secure offshore lines of credit, ensure liquidity for sustainable financing across various sectors of the economy. Our listing on the Victoria Falls Stock Exchange, VFX, cements our position as a solid investment for equity financiers. By remaining alert to opportunities, we are determined to create lasting legacy to our stakeholders and to withstand the test of time. Despite our achievements and the challenges that remain and we foresee, emerging threats such as cybersecurity risks and climate-related financial vulnerabilities require elevated vigilance, both at institutional and industry level. It is imperative that we rally together to instill confidence into the sector by safeguarding depositors and addressing liquidity constraints. Through collaboration, leveraging shared expertise, infrastructure, resources, we can restore a buoyancy to our industry. In closing, I would like to thank everyone for their participation in this year's survey. Its continued success over the years is a testament of your involvement and, more importantly, your commitment. May we continue to draw valuable knowledge, best practices, insights from each other, and collaboration as we navigate ahead. To all participants, all the best, and congratulations in advance to the winners. Let us strive to uphold high standards that are expected of the banking industry. I thank you. I'll then further on take the opportunity to introduce our guest of honor, the immediate former director of of African Economic Research, AERC, Dr. Innocent Mashe, was appointed Deputy Governor of the Reserve Bank effective October 2022. Dr. Mashe is in charge of economic research, policy, information technology, fintech, human resources, and the administration divisions at the Apex Bank. As Deputy Governor, he is also a member of the Reserve Bank Board of Directors, Human Resources Management, Banking Sector Stability, Audit and Oversight Committees. He has served on boards of various public and private institutions across Africa and internationally, an expert in applied and policy economic analysis. Dr. Mashe has previously held prominent positions internationally, including as a consultant for the World Bank and as chairman of the Department of Economics at our very prestigious University of Zimbabwe. He joined the African Economic Research Consortium from the Human Sciences Research Council, where he was a senior research specialist responsible for economic performance and development research. He is an economist with many years of university teaching and research experience in development economics, digital finance, microeconomics, and information economics. He is also widely published in the areas of health, markets, employment, household livelihoods, and macroeconomic policies. Ladies and gentlemen, allow me to introduce our guest speaker, Dr. Mashe.
Good morning, everyone. It's a pleasure to be here this morning. We just drove up from Nyanga, and I was hoping that you would delay the breakfast a little bit, but then I thought, well, it will cease to be a breakfast, it then becomes a lunch meeting. So, ladies and gentlemen, I want to begin by saying thank you for inviting the Reserve Bank to be part and parcel of this very important function. And I want to recognize our sponsors, the First Capital Bank. I also want to recognize all our senior bank executives who have taken time to participate not only on this occasion, but also in the collection and processing of the information that was used to make these awards possible. So all protocols observed. If I have missed somebody important, please accept my apologies in advance. Let me also say that I normally like to tell people that the presentation that you see may not be what I'm talking about. So bear with me. I always say to professors in the university that once you've completed your paper, you need to send it to the journal. A lot of professors end up not being professors because their research papers are in their desks. So my papers are always being revised, and the presentation you see is several steps away from what I'm going to talk about. So what I've been asked to talk about is an overview of the Zimbabwe banking sector. So it's one of the easiest speeches I will make and the shortest. because all I'm doing is giving you an overview. First of all of you are in the banking sector, or most of you are in the banking sector. So you know what the role of banks is within an economy. But I would like to define it differently, to say that the role of banks and banking in our economy is to provide the lifeblood of our economy. And without the blood, there is no life. Any economy, particularly one like ours, which is striving to be a market economy, needs to have a vibrant and thriving banking sector. So really, the roles that the bank plays is obvious in the definition that I have given you. But I wanted to zero in on something that Mr. Mafukidze talked about. And thank you, sir, for inviting us this morning. Banks are key in maintaining financial stability. And therefore, the role of the central bank really is to facilitate for that to happen. The mandate of the Reserve Bank of Zimbabwe, as defined in the Act, is to make sure that that happens. But it doesn't go out there and participate on a daily basis in what you all do. So it is through the banks that this happens. Now, let me quickly talk about the condition and performance of the banking sector. In the year that's almost gone, the performance of the banking sector continues to demonstrate resilience, as has been mentioned, and there is quite some stability that has been observed. This is reflected by adequate capital levels, satisfactory asset quality, and stable liquidity. But key is that the sector has sustained its profitability. Let me, before Andy starts talking about me being very positive, let me just say that it is about time that the banking sector should start depending more on other income streams rather than revaluations. So although they are sustainably profitable, we need to see a diversification of income sources. Out of the 19 operating banking institutions in this country, only one is experiencing liquidity challenges. And I want to say immediately that although it is currently operating on a corrective order that was issued in April, the institution has vastly improved. So we can safely say our banking sector is safe, resilient, and profitable. The Reserve Bank is closely monitoring the bank's condition and performance, and as corrective measures are being implemented by the institution, close collaboration with shareholders continue to drive its progress. As of the 30th of September this year, all banking institutions were adequately capitalized, including the sick baby. The average capital adequacy and Tier 1 ratios of the banking sector were 37% and 32% respectively. Credit risk in the banking sector remains low, albeit with a marginal deterioration in the aggregate non-performing loans to total loans ratio, which stood at 3.2% as of September 2024. Let me emphasize that non-performing loans has been one of the sectors really good excellent performing indicator, because we've always been below 2.5%. However, having said that, let's note that the benchmark here, global benchmark, is 5%. And you can see that on the graph on your right-hand side. The metrics I was talking about, you can see on the left-hand side where capital adequacy as of September 2024 is about 37%, global benchmark is 12, prudential liquidity ratio 57.5, and so on. So we can safely say that the indicators compare favorably to the previous quarter and international benchmarks. In terms of the prudential liquidity ratio, as you can see, it is pretty impressive. And as I said, all banking institutions, bar one, are compliant with our minimal prudential ratios. I also want, because this is an overview, to give you an idea of what has been happening to deposits, particularly our own currencies deposits. Now, the weekly growth in loans and deposits for ZIG, forget the end FX part, between April and November this year are pretty interesting. They've been steady up until September the 27th, when there was a depreciation in our on the value of ZIG, and therefore, although I can't say it's a structural break, there has been a marginal dip. However, what I believe personally is that it's an equilibrium adjustment. However, what this reflects is a squeeze in liquidity in the market. Weekly growth in ZIG loans and deposits post that depreciation is moderated significantly, with average weekly loan growth coming down to from around 6.3% to 1.2%. In terms of foreign currency, I said forget it. Now you can you can get back to it. The weekly growth in loans and deposits for ZIG for foreign currency deposits, have been steadily rising. Those who have statistical acumen can put us a trend line, and you will see that this has been growing. This indicates, because I want to link it to banks, that there is confidence in the banking sector. You could argue that a $0.3 billion US dollars might be small, but to me it is quite significant. However, what's more interesting is what we have on the right-hand side. So where are these loans going to? I've summarized that in the smaller little picture over there that indicates in our figure that most of our loans are going into the productive sector. And the consumptive loans are just about 25.37%. So foreign currency denominated loans have continued to dominate total banking sector loans and advances. This skewness towards foreign currency denominated loans reflects the substantial demand for US dollar lending, which can heighten exposure to credit risk. Now, let me talk about another risk that we are observing from the central bank. And when I say we, I include the banking sector as well. It has been mentioned that cybersecurity risk is rising. I cannot overemphasize this fact. However, what it also does is it opens up potential areas of investment that can help the banking sector in this country deal with some of cybersecurity risks that are emerging. We know the role that AI is beginning to play in our everyday lives, but we also know that generative AI is not the all and all. Technology is improving very, very fast. So we now have super AI and we have quantum computing. What is happening now is that some of our tools that are in the sector right now may be obsolete in the next 12 months. What does this indicate? It indicates the crucial need for continuous improvement and innovation. The second risk, again, that has been mentioned by those in the banking sector is climate and sustainability risks. ESG is no longer a cliche. It is crucial for the development going forward of our financial services sector. Because for us to remain profitable, we need to get a handle on the new avenues to sustain our institutions and the public's deposits going forward. The second and last, the third and last risk that we face is something that is the title of this breakfast meeting, which is the risk of instability. Some of our institutions, on average, are very stable, but there is a lot of volatility, not in the currency or in the exchange rate, but in the way in which we handle how we deal with changing and dynamic liquidity conditions. We need to chart a way that makes sure that we are trending close to the average performance rather than to fluctuate back and forth widely. Why is this crucial? I put this in very simple terms, but the truth of the matter is when you jump up and down, you never know when gravity might fail. Now, I was going to talk a little bit about the rationale for liquidity management. The management of liquidity speaks directly to the mandate of the Reserve Bank in terms of maintaining price and financial stability, reflecting its functions to set monetary policy, supervise banking institutions, and make sure that our national payment systems are stable, sustainable, and ever improving. High levels of liquidity can induce inflationary pressures in the economy and instability on the exchange rate. On the other extreme, too little liquidity will lead to settlement failures and financial instability in the banking sector with spillovers to the real economy. Therefore, the Reserve Bank always endeavors to balance the need for liquidity to support smooth functioning of the banking sector and payment systems with the risk to public interest objectives. Let me say the idea here is to make sure that whatever the central bank does needs to be balanced. It needs to be driven by positivity and it needs to take into account all of the risks that I have mentioned. Therefore, the RBZ regularly consults with the financial services player through BAZ and other member associations on an ongoing basis. The idea here is to say that we are all in the same game. And this game, as Team Zimbabwe, we should, we must, and we will win. Thank you very much.
Thank you. Please give the Deputy Governor, Dr. Masha, another round of applause. I think Dr. Masha was remembering what happened the last time he did a presentation. Was it last week, Deputy Governor? Ladies and gentlemen, if you look on your tables, you will notice there is a barcode. Now, if you scan that barcode, so please do if you can, you will have access to 5 things. The first is a newsletter on business. The second, a magazine, the digital version. The third is banks and banking review articles. The fourth is Zimbabwe economy survey and analysis. And the fifth, you're going to get 5 issues of the Zimbabwe Independent paper, e-paper. I think for that, we'd give a clap for that. I would not like. So please scan the codes, and that will be coming up. Well, I think the numbers speak for themselves there by the Deputy Governor. The banking sector is safe, secure, and profitable. So let's now have a look at the analysis to see exactly what the survey says to us. Now, to be able to give us that, I'd like to call up the consultant to look at the survey report, Urco Consulting Inc. So please welcome them. Give them a round of applause. Thank you. Oh, you can do better than that, ladies and gentlemen. Thank you. And you must keep clapping until she gets here.
Good morning, ladies and gentlemen. All protocols observed. My name is Farai Mshondiwa, and I am representing the analysts for the 2024 Banks and Banking Survey through Urco Consulting. So, just to begin off, I think 2024 has been an eventful year. We have experienced notable developments, some expected and some unexpected. On a global scale, geopolitical tensions persisted, which spilled over to varying blocks of trade fragmentation, and to top it off, climate change-related natural disasters ensued, from the devastating floods experienced in Germany to declarations of states of emergencies due to severe drought linked to the El Niño experienced here in Southern Africa. But I don't want to be a negative Nelly. It's not all doom and gloom. We also saw on the global level inflation figures easing, with rising optimism for 2025. After peaking at about 9.4% on year-on-year inflation in the third quarter of 2022, the IMF projects that headline inflation will fall to around 3.5% by the end of next year, which is actually slightly below the 2-decade average before the pandemic. In most countries, inflation is now hovering close to central bank targets, paving the way for monetary easing across major central banks. Now, to highlight on our presentation, bringing it closer to home, I'll just wait for it to be, but I'll just continue, and then I think my presentation will catch up with me later. Bring it closer to home with our own developments. Among them was the introduction of a new currency in April 2024, the ZiG. The change was consistent with the Reserve Bank's thrust towards stabilizing the economy and curtailing the inflation that had now settled in the 3-digit territory. Since then, we've experienced relative stability, and it's been oscillating between relative stability and moments of panic. However, I'll not go into the various macroeconomic developments. I think Dr. Mashe was very thorough in explaining what has been going on within the banking sector and the general economy. Instead, what I'll highlight are variables that have arisen and that we've been able to gather up from the banking sector and their implications on the banking sector. The first one has been constrained liquidity. This has become a catchphrase of sorts amongst those in the financial sector, and undeniably so. It has been an amalgamation of factors that has landed us here. One of such factors that we've seen a trend in as we analyzed our data was the decline in deposits. There has been a 20% decline in deposits in the banking sector over the last 2 years, from circa $4 billion in 2022 to approximately $3.2 billion in 2024, of which the downward trend seems persistent as we firefight the effects of continued informalization, among other things. Other factors that have assisted in tightening the current liquidity conditions are policy changes. As Dr. Mashe also highlighted, there is a crossroads that our central bank is facing where they are trying to stabilize the economy, but at the same time trying to not to suffocate businesses in the country. So we've seen there has been issues of tightened liquidity over the past few months. So what are the implications of this that we've seen? One of such implications is we've seen the banking sector become more conservative in regards to loans and lending. This is being reflected in the decreasing LDR from hovering 60% in June 2023 to nearing 50% in June of 2024. A further implication as banks take on the conservative lending stance is it has opened the banking sector to financial disintermediation. Myself, coming from an asset management background, I see this as we are now having an inflow of conventionally banking clients coming to seek alternative sources of funding from other financial institutions and not necessarily the banking sectors. The second variable would be the high US dollar penetration, which has been indicated to be currently greater than 85%. This has led to an inclination towards US dollar assets and liabilities. In 2023, foreign currency deposits accounted for 77% of total deposit, and this figure has remained north of 70% for 2024. The trend is similar for foreign currency denominated loans. The third variable that we have also picked up is there has been noise surrounding de-dollarization, of which it has created a bit of instability and uncertainty, and this has led to a conservative approach towards long-term assets. As we've also seen, there has been limited mortgage opportunities available. Economic informalization is another variable that we've picked up. 2/3 of the economy is now deemed to be informal, and this has played into the financial disintermediation we spoke of earlier, but from a different angles. Individuals now prefer using mobile money platforms and money transfer agents as issues of convenience, cost, as well as accessibility come into play. We're going to get to a point where you're most likely to have an individual have one of the mobile apps as opposed to a traditional bank account, if we're not already there, which further speaks to the declining trend in bank deposits. Sorry, apologies. And then the last variable that we're going to speak on is the softening of our mineral commodity prices. Metal prices, which are crucial to Zimbabwe as an exporter, have fallen for the third consecutive year, falling by 0.2% in 2024. We saw the effects in some of our local companies, and from a banking sector perspective, a decline in our foreign receipts. So given our highlighted variables presented, how has the banking sector performed for the first half of the year for 2024? I won't go into much detail as again, I think our Dr. Mashe has thoroughly gone through the performance. What I'll just do is highlight some of the quick points. I think our banking sector has been quite resilient given what it's been thrown at, what's been thrown at it. This is reflected by the adequate capital levels, which have averaged 40% throughout the year, which is above the 12% benchmark. There's been satisfactory asset quality metrics, with the NPLs averaging 2% against a benchmark of 5%. And there has been sustained profitability with an average return on assets of 20% throughout the year. However, slight concern should be noted on the quality of earnings, as non-interest income is currently 87%. Of that, most of which is property value gains and revaluation of foreign currency gains. On the other hand, despite our mention of the overall conservative approach to lending we saw earlier, in the current banking sector loan profile, 72% of loans have been channeled towards the productive sector, which to us reflects efficient lending. Overall, we're steadfast in our analysis that the banking sector has been quite resilient through the macroeconomic volatilities, as indicated through the key indicators. And moving on to some of the bank sector topical issues, I've already touched on most of them, but I'll just highlight the few that were not given mention earlier. The first being issues and conversations on ESG, on the ESG threats. While efforts are being made, this continues to be almost an elusive goalpost, especially as a lot of our regional and international credit line partners have placed this among requisites. Another topic of note, which ties in with limited liabilities, especially for local banks, is the conversation of whether there is an unfair playing field for your local versus international banks, especially as confidence in the banking sector occasionally becomes shaky. And lastly, digitalization and AI. We have seen developments in the banking sector as mobile banking has flourished, but more conversations on how we can push on this front and the fight for relevance are ongoing. And then moving on to our award categories. As we're collecting data and coming up with various criteria for these awards, one thing to note was in terms of the ESG, financial inclusion, as well as digital innovation categories. We would implore that for our banking sector, more quantitative data is available for this. You're already doing the work, especially when it comes to ESG. You should be able to present it in a quantitative. So if it's supporting a school, how much was put into there? Let us see, let us know the work we are doing, because you are doing great things in those areas. And then lastly, when it comes to our what are we expecting for 2025, looking forward, our emerging trends. The first one being your increasing regulatory compliance. We've taken a note that there has been a trend for increasing regulatory compliance amongst the banking sector, so kudos to the banking sector on that, on those developments. Another trend that we see incoming, ESG, is not going anywhere. If Harare temperatures this week have been anything to go by, the topics on climate change, governance, social responsibility, they are not going anywhere. So we need to put our heads together and be able to push forward on this front. Another ongoing trend that we've also noted is regional expansion. We've noted a lot of our banks have started on the regional expansion, not necessarily the bank entity in itself, but through its other subsidiaries, whether it's your microfinance or insurance. So we're going to see this trend going forward. And then there is the issue of digitalization and fintech disruption. We've already noted and spoken on this in terms of your mobile apps and your money mobile platforms, as well as crime security, which is something that has been of quite concern for 2024, and we see this continue being something that we need to continue working on as we go into 2025 and beyond. Their new product innovation, we have seen that, I think when it comes to fintech, globally, sub-Saharan Africa has been at the forefront, and we continue to see this trend where there are going to be new products that we're going to see in the markets, and we're looking forward to this. And then lastly, when it comes to financial inclusion, we've seen that there has been an improvement when it comes to financial inclusion, specifically for those criteria mentioned in the National Framework for Financial Inclusion. That's your women, youth fragments. We've seen that there has been an improvement in those areas, and it is a trend that we see going forward. So with this, I conclude, and thank you for having me.
Please, ladies and gentlemen, another big round of applause for Farai Muzwandiwa from Earthquo Consulting, giving us the facts behind the survey. Of course, this is the Banks and Banking Survey and Awards 2024, brought to you by the Zimbabwe Independent and First Capital Bank in partnership. And of course, we're streaming live on HSTV and Newsday. So hello to all the viewers watching us live through those platforms. Now then, we're just going to take just a couple of minutes while we set up the stage for the panel discussion. We should hopefully be serving some desserts or some sweets, and you can also grab a quick cup of coffee. So just give
What I really like about the U of A is that it's such a big school, but I also get that feel of a community. It makes me feel like I belong.
The U of A campus is very aesthetic, according to me.
The U of A has a very diverse student body, and I can hang out with my American friends, and then I can go hang out with my international friends.
I love the warm weather and the sunny weather, and Tucson is like perfect weather every time.
I enjoy the environment. I love the national park. It's really fun. It's beautiful.
I love the vibe of the U of A. Like professors, it is supported by friends. It's a very friendly vibe, and they always help you grow.
Don't check bank balances. Money at the
Right, hello ladies and gentlemen, if you could please retake your seats and we can begin the panel discussion. Thank you very much indeed. This, of course, is the Banks and Banking Survey and Awards 2024, brought to you by the Zimbabwe Independent in partnership with First Capital Bank, and we're streaming live on HSTV and Newsday. Right, ladies and gentlemen, if I can just ask you to please take your seats. Thank you. Okay, without further ado, we'll move into our panel discussion. I'd like to please ask the following panelists to join me on stage. The RBZ Deputy Governor, Dr. Innocent Mashe. Deputy Governor, is he there? CZI, represented by Kelvin. Kelvin, are you here? Thank you. And Consumer Council of Zimbabwe, Patience Chikwiwiro. Patience, thank you. Please give them a round of applause, ladies and gentlemen. They are coming up here. Ladies and gentlemen, a round of applause for our panelists, please. And of course, trade economist Professor Mugano and economist Eddie Cross. Yeah. Okay, so we're just waiting for the Deputy Governor. Well, okay, well, while we wait for him, he will come onto the stage when he's back. So, of course, you know the theme of the Banks and Banking Survey and Awards 2024, weaving through a dynamic liquidity terrain. Let me start with you, Gift. Liquidity, obviously, issues affecting Zimbabwe economy, ranging from, could be either money supply growth, it could be around inflation. Of course, the exchange rate is there. We've also had the ZIG introduced in April this year. There's a lot of things happening in the markets in Zimbabwe. You heard the report there by ECRO Consulting, and of course your own analysis. So maybe talk to us about the theme, weaving through a dynamic liquidity terrain. Gift?
Thank you very much, and I was very anxious. I wanted the governor to be here.
Oh, no, he should be here, yeah.
Yeah.
Ah.
Okay, he's here.
Dr. Mache, thank you.
By the way,
a round of applause for the Deputy Governor. Thank you so much.
As the Deputy Governor is coming through, I must say that he was my teacher, very good lecturer. He used to offer me a lift from Avondale all the way to University of Zimbabwe, Avondale West. And what you see, he made me to be what I am. Everything which you see, good and bad, he is the culprit. So you must blame him for anything. He taught me. Anyway, I have high respect for you, Dr. Mashe. So coming back to, I was trying to make sure that you sit down, but he was my lecturer for sure. So my major issue on liquidity is coming from contradiction between central bank work and the Ministry of Finance work. That gives me sleepless nights. Central bank is looking at a tightening stance to try to reduce excessive liquidity, money supply in the market, which is something which I support, to rein in inflation. But Ministry of Finance's budget is expansionary, right? And it becomes like poison given to a child who is sick, who is the economy, who is in a ward. If you look at our budgets, I would want to say the central bank has become like this, so the Ministry of Finance has become like the second central bank in court. When we look at how much money they pump into the economy, which then result in excessive liquidity. If you look at their budget, just last year budget, 2024 budget, it shot up by over 1,000%, from $4.5 trillion to $57 trillion, right? When it was still a Zimbabwe dollar local. Now the 2025 budget, now there are two figures. I don't know which one to report. The first figure is $276.4 billion from 119.97 billion ZiG, which is 150% increase. Then the second figure, which is shown in the voter appropriation, is 322.7 billion. So those are the two figures for your budget. Don't know which one do we take in our conversation. So the first one is equivalent to 7.7 billion US dollars. The second one is equivalent to $8.9 billion. But the point I want to make is that increase of 168% for the second figure, or 150% for the first figure, against a growing economy of 6%, it tells you a problem with inflation caused by excessive money by Ministry of Finance. Now the danger end is that who is taking the lion's share of the budget is Minister of Defense, 500.9 billion US dollars. We are million US dollars. I like billions. Million US dollars. And we are not at war. Defense is getting that lion's share. Right. Are we clear in terms of our priorities and how is that money going to be used is another question for discussion. Minister of Finance, again, I'm worried. They are taking almost 300 million US dollars. Yet, Minister of Finance must be not holding a purse to dish out. They can only hold that purse when there are calamities coming next year, like COVID-19, like droughts and cyclones. But we don't have those risks ahead. Why are they holding that money, 300 million almost equivalent, when Minister of Energy, which is the critical ministry, is being given 7 million? So the point I am saying, the ministries of Agriculture, Minister of Transport, and these ministries, Defense, OPC, they overspent. Minister of Agriculture had already overspent by almost 150% by the first 9 months. So that is our challenge, which has not been presented here, caused by Minister of Finance. So if anything, the major culprit in terms of driving excessive liquidity in the market is Minister of Finance. But now central bank, coming back to central bank, issues which I want to raise with the government is that, yes, you want to reduce liquidity, but you must never put a country on a national fasting in the spirit of trying to reduce liquidity. Like we hear that exporters are not getting the export retention. I talk to them. I stay with the people. I stay with the companies. They tell me that they are not getting that 25% because central bank might want, of course there's an arrangement that banks should then be able to pay that, but there's not enough liquidity in the market to do that. So it's causing risks of default and also viability challenges in the market. The last point I want to raise is that we are so fixed, and this is my last point, and I like that the Deputy Governor is responsible for policy also. We are so fixed on liquidity and exchange rate, as if this whole matrix of the economy is wired or geared on just focusing on the rate. And we are so desperate to make sure that we stabilize the exchange rate, even if it means someone must die. Hallelujah. Why are we doing that? There's nothing wrong even if the rate is 1:200. Because in South Korea, the won is over 1,000 won against $1 US. But what is very important is stability, not the quantum of the exchange rate. So why are we draining the market to a point that we are killing demand? Why are we holding back on payments of contractors and giving them treasury bills because we want to drain liquidity? Why are we not paying civil servants on time because we want to hold on liquidity? And why are we not paying contractors and input suppliers for the agricultural season? If we wanted to do command agriculture, which we wanted to do, and we are now killing the agricultural sector, there are rumors that we have not planted enough We have actually planted 1/3 of what is supposed to be planted by Thursday last week because the input suppliers have not been paid on time and there's no capacity to support this season, even if they're good rain seasons. So why don't we deal with the big elephant in the room? Two of them. Corruption, so we can save our money and we direct our money into production. The second big elephant is production. So we stop corruption, we have enough money, we direct our money into production, and we have a big indaba on production than to focus on the exchange rate and then the rate. The advice to you, the Deputy Governor, and I will be so kind because you are my teacher, so I won't be too difficult, is that Central Bank cannot solve our problems as a country, neither Minister of Finance alone. The Minister of Agriculture, must play a critical role in terms of creating production and having various instruments to push sectoral production. And that sector must be market-led, not command. Wherever there's command, there's no production. That's why in tobacco, we have no command in tobacco. We are number 4 in the world. But the same farmer who is producing tobacco cannot produce maize and soybean because there's GMB, which controls the price. There's command agriculture, which distorts production. Hallelujah. In the same Gokwe, we produce tobacco, but we can't produce maize. So government must get out of command. I'm hearing when I'm talking to clients, to colleagues in the sector, that we might hit 300 million kgs next year of tobacco. But we might be food insecure next year because of government interventions. So let's get out of that place. Then the second advice is that in industry and commerce, we need to have a real industrial policy, not this one which was done by Minister of Agriculture, Minister of Industry. The growth was something which was like an assignment for 101. There's nothing there, that document. It's shallow. Let's have a proper industrial policy. If you don't know how to do it, I'm here. I can help you for free. This is the honest truth. That document is just shallow, no target, nothing. Let's have a real industrial policy. Let's have a local content policy, a local content act, a local content regulations. Right. We are importing over $4 billion worth of goods, which we can produce locally. We must domesticate them, the toothpicks, chewing gum, pampers, tissue and paper, fruit and vegetables. We need a local content policy which stipulates what should be done locally and the incentives. That's the Minister of Industry and Commerce. We must have an integrated master plan for energy. We must have a value addition and beneficiation in the mining sector. If we don't have those matrix of these policies, and we continue to hear media conferences talking about Central Bank and Minister of Finance, Central Bank role is to then provide the incentive framework and the financial stability. Minister of Finance, instead of them being Minister of Taxation now, they must, I'm now ending up, they must focus on reducing their taxes, increasing tax incentives for those who are increasing production. In that manner, we can do it. In conclusion,
thank you.
Zimra must behave. Because Zimra is killing the goose which is laying the eggs. I know it's not liquidity, but it will kill also affect liquidity eventually. I will rest my case there, but I'll come back on Zimra. Thank you.
Thank you. A round of applause. You can see why he's a professor, yeah? Okay, thank you, Professor Mugano. Gift, thank you so much. Eddie, let me come to you. You heard what Gift said there, of course, the factors influencing liquidity in Zimbabwe, and also, as of course the group CEO of Alpha Media said in a recent article, explore strategies that can help both large enterprises and small business maintain financial health. Talk to us and maybe add to what Gift is saying. Eddie?
Thank you very much. Well, good morning, everybody. Morning. This question of liquidity, I want to discuss it from an industrial point of view or manufacturing production point of view. This year, for example, there's virtually no financing for agriculture. And friends of mine who've got capacity, who've got irrigation, who've got everything that's required to grow a substantial crop this coming season, simply have not been able to finance their requirements. And I think so long as that situation prevails, you cannot really expect agriculture to recover. The farmers are there, the land is there, the resources are available. I think we can put this summer around about 300,000 hectares under irrigation. So climate change is not an issue, providing we have sufficient money to grow the crop. And I can remember a time when every bank in Zimbabwe had an agricultural department where there were specialists. And if I was farming and I produced a budget for the coming year, round about March, I would go in and talk to my bank manager. He would refer me to the agricultural guy. We would agree on a budget for the crop, and I would go back to the farm and start implementing what I was preparing. By June, I'd have all my inputs on the farm. By September, October, all my equipment is repaired and ready to go. Can we stop photographing? It's a pain in the butt. And I would plant in October or November, reap in May, deliver my product to the marketplace. The bank would recover its money through a stop order. It was a seamless situation. And my bank manager would come to me at least once a month on the farm. He would know as much about me as anybody else. And he would even finance my school fees. Now, that situation simply does not exist today. There's not a bank in Zimbabwe, in my experience, who knows what the hell goes on in agriculture. Not a bank. And, CBZ perhaps comes closest to it, but that's it. When you look at industry, well, look at the contracting business. We have an enormous backlog of infrastructure. We're producing 1,100 megawatts of power. We need 2,400. The ZES is completely broke. There's no possibility of us borrowing more money. And God help us if we get the Chinese to build any more power stations. But it's not just the power situation. To put another 1,000 megawatts back into Zimbabwe, you need $1 billion. $1 billion US. So we've really got to start thinking about this infrastructure. The road program. The road from Beitbridge to Chirundu is the most important road in southern Africa, maybe in Africa. It carries 1,000 trucks a day. Yesterday, 300 buses went through Beitbridge. And this road, apart from the bit that's been fixed at a huge cost by the government of Zimbabwe, is a death trap. From Harare to Chirundu, we're losing 2 to 3 trucks a day to accidents. It urgently needs complete rebuild. So does Beitbridge to Victoria Falls. And if we can't finance that game, and what we've been doing up to now is completely crazy. We appoint contractors to build roads for SADC. I don't know what they spent, $180 million. Not one contractor has been paid. If that's a liquidity crisis, believe me, it's big. And I don't know why we get ourselves into this situation. The vice president was head of the SADC preparations, and he just gave instructions. Want you to do this. And they went to the contractors, and the contractors said, yes, boss. And they spent that money. And we haven't paid them. We still owe $100 million on the Beitbridge to Harare Road. You can't provide infrastructure with short-term money borrowed from a local bank who's relying on deposits. You can't. You've got to have long-term money for that. And I think that part of our liquidity crisis, in fact, a major part of our liquidity crisis, is the fact that we're completely isolated from the world. I went to Morocco last week. I was at the Africa Investment Forum in Morocco. Presented my passport, my beautiful Zimbabwean passport at the desk. I get hauled off and detained for 2 hours. Not another single passenger on that flight was detained. Me, because I carry a Zimbabwe passport. in Africa. You know, God, I tell you, it drives me mad. African Development Bank says we can fix the railways in the region, but we can't touch Zimbabwe because we're a pariah state. Really? Despite the assurances from the Americans that they've lifted sanctions on Zimbabwe, ZEDERA still is in place. And if any of the multinational banks go to their boards and seek approval for a loan to Zimbabwe, it is vetoed by the Americans. Not because they don't like us, not because they don't think our projects are viable, but simply because ZEDERA bans any multilateral investment in Zimbabwe. Who the hell are we? What significance are we in the world? Why are we the only country out of 60 countries in the world under American sanctions, under sanctions stipulated by the US government? And then, when I was chief economist of the Agricultural Marketing Authority, we borrowed $1.5 billion US every year in March, and we on-lent it to the banks for on-lending to the farmers. We never defaulted, we had a 100% record, and that was under UN mandatory sanctions. We were able to raise that money at international rates. Zimbabwe, independent Zimbabwe, you know, is unable to operate like that. You know, and I just think that if we don't find a solution to these long-term financing needs, we are not going to be able to achieve our goal of middle-income status by 2030. Not a hope in hell.
Thanks. In conclusion.
Not a hope in hell. If we can overcome this, I was staggered by this meeting last week in Morocco. They committed $29 billion to 500 projects in Africa. We in Zimbabwe put up 2 projects, both of which were funded. Where were we in previous years when this money was available on the table? We had no projects. This is the first time in 6 years that anybody put a project on the table at the AIF. And to the best of my knowledge, not a single Zimbabwean bank was there.
Okay. Please, thank you, Eddie. Big round of applause for Eddie Costa. That was interesting. Let's now have a quick chat to business. CZI, of course, represented by Kelvin. Kelvin, it's clear that 2024 to most people hasn't been a kind year. I think people are speaking to people here at the Banks and Banking Survey and Awards breakfast, and they were like, we want 2024 to be over, but we're prepared for 2025. So from business perspective, talk to us about the dynamic liquidity terrain in this 2024. We're talking about lack of access to loans, particularly patient capital is not there. The price of the facilities obviously is going up and up. Lines of credit are getting less and less, and if they are there, they're probably going for more horticulture or those sort of sectors. So, talk to us from a business perspective.
Thank you, Rogers.
It's on.
Use mine.
Thank you. Thank you very much. I think business has had a very hard time of it. I think, speaking just for the industrial-based manufacturing companies as well in particular, they've had a pretty hard time of it. 2024 budget came through with a lot of structural changes for business. I think route to market is an example, where generally route to market is a function of technology. It's a function where you prioritize, efficiencies, reducing costs. We had regulations that basically prioritize compliance, good and bad, but ultimately brought an added cost to business. We exist in an environment where I think venture capital and private equity space is quite shallow. So that basically means support from an equity base for businesses is scarce. Our capital markets, I think the Zimbabwe Stock Exchange and the Victoria Falls Exchange as well, I think the activity there speaks for itself. There's also been challenges in raising capital there. So this puts a lot of pressure for businesses to revert to loans, short-term financing, for projects and in instances where equity should basically be the norm. And so what we then see is that given the environment itself very volatile, I think it's been eloquently put here. It basically means that a business has to be prepared for a lot of shocks to its business and disruptions. But when you have a capital base that is thin and you have a banking infrastructure that is capital constrained, it basically means businesses are out there on their own and in essence orphans. And so where you would expect business, finance, if you are in any other environment, capital shouldn't really be a differentiator for businesses. It is becoming an issue where business, whether it lives or dies on the basis of its ability to access capital. The official depreciation that we experienced tore a lot of value from businesses, and a lot of them are suffering from that effect and are failing to actually justify a going concern basis. We basically have also seen that even going to banks themselves, you get your facilities approved, but when you go back and you ask for a drawdown, you're informed that there is no capital. They cannot provide liquidity to your business. And so you end up having to, so it's a value chain effect where you end up having to squeeze each other in that value chain. And you are basically just kicking the can down the road. I think 2025, people may want 2024 to end, but with no solution in sight in terms of dealing with the real issues that businesses are facing. The situation can only get acute going forward unless the issues are addressed. I won't speak to them too much because I think they've already been enunciated here. But it's not going to get better. We have CFTA coming in 2025, and in instances where multinational companies withdrew in Zimbabwe, we're seeing that withdrawal. I think we've seen a number of big name companies that have announced withdrawal from the market, Zimbabwean market, from a manufacturing perspective, and in other instances just left a distribution center. We are now seeing a trend where our neighboring countries are now basically courting our local champions themselves and offering manufacturing bases in those countries. And the incentives are quite high. We do have a couple of companies that have taken that up. We expect to see that trend to grow. And I think, I think the professor spoke to it. Our priorities really need to be clear in terms of just budget allocations, in terms of what we're prioritizing in lending. But I think going forward, there is a lot of work, and we'll continue, discussing the issues and trying to find solutions. But CFTA coming, we expect companies to set up base elsewhere and start throwing goods into the Zimbabwean market, because we will have little recourse to defend our local terrain. So yeah, that's package.
Thank you, Kelvin. Please give him a round of applause from CZI there. I think the two very critical issues to look at and to be aware of course, it's the growth in the informal sector. There's no doubt about it. The latest ZNCC report said that it was 72% of our economy was informal. Deputy Minister of Finance contradicted that and said it was around 54%. So we need to get that right number. But anyway, I'm working on 72%. So that's the one issue about what do we do in 2025 about the informal sector, because there is a lot of liquidity rattling around out there, and what do we call them, pillow banks. Also, the second most important thing, and I think banks need to be very, very aware of this, is the African Continental Free Trade Area. Next year, it's really going to jump into effect. It really is. Yet, at the recent conference held looking at the state of industry, when I asked the room how many people actually knew anything about African Continental Free Trade Area, and this is a room of industrialists and business people, I think only 4 people put their hands up. So that gives you an idea about the lack of knowledge of the AFCFTA and what needs to be done, particularly from a banking perspective. Because if we're not right, and I think you said it, Kelvin, if we're not ready, you're going to have products hitting our market which will be cheaper than what you can produce locally. So we need to get our act in order, no doubt about that. Patients, we're all consumers here. Of course, you come from the Consumer Council of Zimbabwe. We're all consumers, and the ZIG came in. It gave us some form of stability. Then, of course, we saw a triple effect of liquidity increase, money supply increase, prices going up, inflation going up. We had the devaluation of the currency. It just wasn't. We've got counterfeit goods, smuggled goods coming in, underweight products being sold. I mean, you know better than me. But your viewpoint of what's happening out there in the market from a consumer perspective, of course, focusing on the liquidity issue as well.
Thank you, Ed. Thank you, Ed. And I feel so proud sitting next to my teacher. Gift was my classmate, and we are his products. Coming back to the discussion topic. As consumers, we tend to absorb all the costs, the inefficiencies, given that we are at the tail of the value chain, and all the chaos that we see in the country, we are the most affected. I would commend my teacher for the tight monetary stance that they've taken this year. It has helped in terms of containing inflation, and it has helped the consumer to preserve in terms of the disposable income. But I would also want to talk to the issues that our consumers were concerned with in terms of the liquidity issues. I would speak about the issue of change. It was a really major issue this year, and we have had to handle a lot of complaints along those issues, whereby people would be forced to, instead of getting their change, they were forced to take sweets. I'm talking from a position of someone who is coming from Glenora. They do have a dollar to come into town and going back there. You get into a comb and they don't have change. You are forced to take maybe a pasta. There was time when combi conductors, they were giving people a packet of pasta for your change. It was really an issue, and I think those issues are still coming in. We also registered a lot of complaints around counterfeits. Why are people being exposed to counterfeits? It speaks to the inefficiencies that I'm going to talk to. As consumers, because of the low disposable incomes that are common in Zimbabwe, we are forced to then settle for whatever is there. We tend to ignore the issues that are vital to our bodies, the issues of health. We forgo those just to survive. So it's really an issue. And speaking about, I'm also passionate about things that happens in the manufacturing sector. Manufacturing sector has not grown from the figures that were shown in the budget. The growth was around 1% from 30 to 33. And that speaks a lot about what we are offering to our consumers in Zimbabwe in terms of what we can produce. Gift also spoke on us as a country importing things that we can make locally. And the effects, all the ripple effects, they come back to us as consumers, and we are so concerned as the voice of the consumer to say Minister of Finance and RBs that they really need to work together to handle or calm the issues that are happening, or the issues that are affecting the industries. We speak about your energy sector, they are also affected. There's no ZESA. You wake up around 4 a.m., ZESA is already gone, and it comes back around 10, everyone is asleep. And those sectors, like Ngano was alluding to, they needed more support in terms of government support so that you really cushion the consumers. There are a lot of issues that are affecting the consumers, especially in 2024. 2024 was really a bad year for us as consumers. And the issue of the counterfeits, the way it's being handled now, very soon you will notice that all the OKs and your TMs will be empty and will be exposed as consumers. And that also talks to issues of liquidity and financial stability in the country. I think I can submit.
Thank you so much. Please, a round of applause for Patience. Yeah, there's a lot going on out there, particularly for consumers, and I think Gift said it. We want stability. I think that's the key. And some way of reducing the margin or the gap which has come down between the official and parallel market rate. Because one of the things that business always talks about is the inconsistencies in the exchange rate system, the different pricing structures that are out there. We can get into the tax regime in Zimbabwe where there's so many tax heads for companies. I think in the tourism sector it could be as high as 20 plus. So there's all sorts of things to consider. And of course the consumers, making sure that consumers can get affordable goods at the right price. Dr. Mache, I left you to last because I thought it's good for you to listen and then be the final speaker and have your comments ready based on some of the issues that were raised, as well as, of course, your own observation. So I turn over to you, sir.
Okay. Thanks, Andy, and thank you to my fellow panelists. Yeah, it's always nice to sit with my students, and one of them is a professor, so they should make me a professor, right? No, but quite seriously, it's always a pleasure when you see, progress. So. Is that better? Okay. Okay. Yeah, that's much better. So I wanted to start first of all with the issue of financial inclusion and applaud the banking sector for really investing a lot in financial inclusion. And we've seen, the numbers grow. I always say that without financial inclusion, we'll never have sustainable growth. We may have bouts of it, low level, but we will not have all-encompassing growth. I also wanted to mention the fact that, because we've been very innovative, maybe because of having no choice, but the idea of innovation within the banking and financial services sector is crucial for us. Why is it crucial? Because we need to find ways in which to navigate some of the constraints that have been placed upon us as a business, that we can't do anything about ourselves. So we have to find innovative ways of dealing with that. And I have to applaud the banking sector for coming up with all sorts of technology-based innovations and other innovations outside technology that have been crucial. For example, you see, when a bank develops an app, right, it doesn't mean that app is not part of the bank. So when we see deposits growing on those platforms, it's part of the bank itself. So I always say to banks, if you snooze, you lose. So, and I am glad that a lot of our institutions have been doing that. It's part and parcel of modern banking. To come to Professor, RBZ versus finance. From the RBZ's point of view, we would like, as a central bank, as any central bank in the world, would like to work closely with Treasury. But the issues in Treasury cannot be solved by us, or they cannot be given to us to try and solve. So a lot of the issues that Prof raised were real issues that we need to tackle. But he's talking to us as financial services sector. We can't, that's fiscal. So I encourage you to talk to Minister of Finance. Yes, indeed, those problems put pressure on the central bank. And yes, indeed, it's really, really hard to deal with these problems without having to be accused of mandate creep. But what has been done is that there are two bodies that have been created to try and have these two institutions work closely together. The first is a liquidity management committee. Don't ask me about how effective those will be, but what the liquidity management committee that I co-chair is to try and build in a way or a window that the central bank can see what is about to happen before it happens, and therefore take measures to contain whatever liquidity or money supply issues that might come from the deficits or otherwise from Treasury. The second is a cash management committee. That committee is internal. It is basically to make sure that we balance revenues to the incomes that we to the expenditures that the country faces. And this is crucial because of the debt burden that the country is trying to deal with at the moment in order to have a path towards arrears clearance. Exporters are being squeezed because banks don't have enough liquidity to settle, especially retention. This is a valid point. So what has the Reserve Bank done? Three things. The first is to introduce an intraday facility where banks that experience gridlock can come to the bank over a very short, within a day, borrow to unlock the gridlock and then pay back to basically, this is just to basically keep the system revolving, because if you have, let's say a company has to pay its obligations to ZIMRA, but government owes that company. So you can, of course, you know, in Shona we say, or maybe I'm not saying it right. So one has to move fast. So the idea is for financial institutions to be able to unlock that gridlock, to get an intraday facility to unlock the payment from the other end. The second is the distribution of liquidity within the banking sector. What we have realized is that there are pockets of institutions with enough liquidity. So when we look at the banking sector as the RBZ, there is enough liquidity in the system. But what we are not seeing is that liquidity being distributed across the system. And the idea is to try and encourage, and this is, you know, friends who are executives in banks here know that we've tried as a central bank to encourage banks to trade with each other. And the truth of the matter is banks in our country do not trade one with the other. So in a normal economy, you would expect that to happen. Of course, RBZ is aware of counterpart risks that a lot of the other banks with enough liquidity try to manage. But we always think that, at least from an economist's point of view, if the loan is collateralized, you can talk about the quality of the collateral, that's something else. But if it is collateralized, surely you can trade with each other. So RBZ has been strong in trying to encourage our local banking institutions to trade one with the other. That unlocks some of the liquidity that's seated in some of the other institutions. In terms of the productive sector, yes, indeed, government is dealing with a very skewed budget where not enough resources are being put into where we would like things to be. But recently, the MPC announced a targeted finance facility to try and make sure that the productive sector has a pool in the financial services sector that they can access. If you read the last MPS, you will find that facility there. So it's up to our companies now to go and figure out how to access that. However, I need to very, very quickly, I think I've already delayed, to mention that this is not a QFO. Okay? So the Reserve Bank is not going and is never going to revert to QFOs going forward. So the idea is that this is a purely financial product that's being availed within the system that is being run through banking institutions, not through the central bank. So it's not a facility for the central bank. Eddie, I can't agree with you more. You cannot finance long-term investment through short-term finance. Something is going to give. We need to put a lot more effort to raise long-term finance. And I can't say it better than that. I also agree on the need to deepen our capital markets. I talked earlier about how the country wishes our financial services players to really innovate around this bit. We know there is a global discussion around concessional finance, but that's a long drawn-out debate because nobody is going to just give funding like that. So efforts to try and push the facilities that we can access. For example, the RBZ is looking into issues around green finance, green bonds and all that, carbon markets. There is financing there sitting, waiting to be accessed. We just need to put our heads together to figure out how to do it. What we should do as a country is also to put a lot more effort towards building a common understanding about our country. Eddie asked, who are we? What are we? I think that we have become so negative that the first reaction you get from a Zimbabwean is a negative one. We need to start thinking positive. We need to start thinking, where do we want to take ourselves, our country, our families, our households to? That positivity. I lived in America for a few years. I lived in the UK for a few years. Lived in Greece for a few years. Don't ask me how old I am, but the common trend is that if an American has $1, he will tell you, I've got a lot of money. When a Zimbabwean has $1, he will say, I don't have money. You see the difference? I think we need to start thinking positive. How to do that, I leave up to all of us. But we need to push the narrative ourselves. No one is going to push that narrative for us. At the annual meetings of the World Bank and IMF in October, which discussion was also held at the annual meetings, spring meetings in April, to engage the Americans to try and explain what the regime this country is in is now. Because there is a misunderstanding of who we are. And I am glad to say that a commitment was made to issue an advisory that indicates what sanctions on Zimbabwe mean. In fact, the idea that the country is not under sanction, hasn't been very clear. So we tried to push for those who say Zimbabwe is a sanctioned country to actually say it clearly. In terms of business relocating, I totally agree. I had an experience with somebody from Botswana who was telling me about the incentive package, and it's huge. Let me come to our consumers. ZIG change. This is where financial disintermediation issues start to arise. When the Zimbabwe Gold was launched, our financial institutions, not financial institutions, our banks were requested to put their orders for cash. I can tell you that coins are there in the bank. I can tell you also that ZIG cash is available in our institutions if they need them. They have to come and order them. Otherwise, the central bank cannot just go, you take this. All of us here may not know, but some of us know that HomeLink has a program of distributing ZIG. And the question is, why did the Reserve Bank end up going to HomeLink? I think this is a question that our banks need to ask themselves. And I tell you what, HomeLink is making a little pile for themselves out of just exchanging cash. That should be part and parcel of what banks do. So I think this talks to really the confidence that we should start building in our own currency. I always say there is no country that will develop or leapfrog if it doesn't have its own currency. It's a fact. And to be fair, the ZIG was faring well until September the 27th. But post-September the 27th is still faring well. Thank you.
Thank you very much. Right, ladies and gentlemen, unfortunately, we could continue going for another 2 or 3 hours. This conversation is getting quite riveting, and there's so much to say, but we have to move on. So I'd like you please to give a big round of applause to all our panelists, RBZ Deputy Governor Dr. Mashe, CZI Kelvin, Consumer Council, Patience, Trade Economist, Gift Alleluia Mugano, and Economist Eddie Koss. Please a big round of applause. Thank you, gentlemen and ladies. Deputy Governor, if I may ask you to remain on the stage, the rest, please, can you leave? Thank you very much. Right, we have now come to... Oh, right, okay, quick. Oh, do you want to have a photo there, Deputy Governor? We're now coming to the time of this morning where we give out awards for the various categories. As you know, as I mentioned earlier, we have a Digital Innovation Award. We've got the Financial Inclusion Award, the Environmental, Social, and Governance Award, and of course, we also have Bank of the Year and Banker of the Year. Please, a big round of applause. Thank you so much. Yeah. Right, if I could ask Pat Devenish, if you could come up, please, to give the praise. Please come up. Faith, thank you. Right, ladies and gentlemen. I think let's move the... Right, ladies and gentlemen. Whew, I feel like that was good workout, that was. Right, our first award is for the, where am I? The Digital Innovation Award. And now, I don't think I have drum rolls, but when I say, and the winner is, I would like you all please just to tap your tables. Can we have a try? Let's try. That's the one. Thank you very much indeed. Right, the nominees for Digital Innovation Award are, first nominee, CABS. Please, a round of applause as I read out the nominees. The second nominee, NMB Bank. The third nominee, POSB. And the fourth nominee, Nedbank. Oh, wait, the runner-up is CABS. Congratulations to CABS. CABS, if you'd like to please come up and get your award. Please keep clapping. This is a... Yeah, thank you. Now, the Digital Innovation Award, of course, digitization has emerged as a driver for accelerated provision of financial services and enhanced revenue growth. The bank scaled up digital capabilities across service lines from its customers, boarding back-end processes, contact center, and payment channels. So it's very clear that CABS has put a lot of effort into its digitization drive. Please, a big round of applause for the runner-up, CABS. Well done, well done. Are you okay there? Right, ladies and gentlemen, and the winner of the Digital Innovation Award is NMB Bank. Now, NMB Bank has established a technology company to spearhead its in-house development of technological solutions. The institution continues to pursue a digital bank model, capacitating both front-end and back-end processes. So please, another big round of applause for NMB Bank. NMB is also, in the year 2023, $1.3 billion worth of transactions. ZIG transaction was realized on mobile banking platforms, which was a jump of 553% from 2022 altitudes. And of course, in 2023, the bank onboarded 7 new billers covering telecoms, council, universities, financial brokers, and medical aid societies. A round of applause for the winner, NMB Bank. Right, our second award is for Financial Inclusion Award. As I said, when I read the nominees, please clap for them, ladies and gentlemen. The nominees are Echo Bank, Stewart Bank, FBC Bank, and POSB. And the runner-up is Echo Bank. Where's Echo Bank? Well done, congratulations. Now, financial inclusion is crucial, of course, as we said, for promoting equitable and sustainable economic growth, reducing poverty, empowering marginalized communities, and enhancing resilience and stability of the financial services sector. So, of course, EcoBank has partnered strategic partnerships with civil society. It's also been instrumental in supporting rural women in business and youth. In 2023, it partnered CARE International and funded the second phase of the Alternative Learning Program to the tune of $100,000, supporting women in business. The bank has also booked a Global Financial Inclusion Award for its relentless pursuit in financially empowering women across the country, key areas being the Buhera district of Manicaland. A big round of applause for the runner-up, EcoBank. Right, and the winner of the Financial Inclusion Award is Stuart Bank. Please, a big round of applause there for the winner, Stuart Bank. They've improved access to formal financial services by the underbanked segments of society, and they remained fundamental in economic development. Financial inclusion has allowed low-income households to absorb disruptive shocks, expand consumption, start businesses, and manage risk. Please, the winner, Stuart Bank. Congratulations. Our third award, the Environmental, Social and Governance Award, ESG. And the nominees are Nedbank. Please, a round of applause. Second nominee is CABS, third nominee POSB, and the fourth nominee NMB Bank. And the runner-up is CABS. Now, CABS, of course, ESG has become central focus for banks, driven by growing regulatory processes, market demand, and the broader recognition. Well, I have to help you. Sorry, I have to do that. And of course, by integrating ESG considerations into the investment, banking, insurance, and other financial products, banks can maintain profitability while making good on their customers' and investors' desires to promote sustainable practices, support social causes, and foster responsible governance. The runner-up, CABS. Please, a round of applause. So the Environmental, Social and Governance Award, ESG winner 2024, and the winner is POSB. Well done to POSB, congratulations. Now, as I said, ESG is so critical, and POSB, through its ESG core pillars, which include health, education, philanthropy, financial literacy, and environmental sustainability, has been at the forefront of assisting various communities and stakeholders with their aim of improving livelihoods. Under their health, they've had Mosekwa Hospital, borehole rehabilitation, Mary Masimbe Secondary School sanitary ware donation, St. Giles rehabilitation. Please, a big round of applause, POSB. Right, our fourth award is Building Society of the Year. Wow, this time around, we have excluded CABS in the Building Society category due to its, listen to this, outlier status in terms of size and scale in the building society space, different competitive dynamics with peers, different growth trajectories, and disproportionate influence in the industry, okay? However, CABS has been considered in all other award categories at arm's length. Anyway, so the nominees for the Building Society of the Year are FBC Building Society, ZB Building Society, and National Building Society. And the winner in this category is National Building Society, NBS. Now, of course, in 2023, the Society has distinguished itself as a significant player in the financial and housing sectors, achieving milestones that bolstered its reputation as a leading institution. Apart from delivering an outstanding set of financial results, Society has pioneered various housing projects in areas like Desira Sekwa and Tinwald, targeting cross-sectional social societal groups. the Society continues to broaden its scope through the introduction of new services lines and complementing traditional focus on housing. Please, a big round of applause for the winner, National Building Society. Right, 2 more awards left, ladies and gentlemen. I think it's 2. Next award is for overall best performing bank. It's an interesting one. The nominees are FBC Bank, NMB Bank, Stanbic Bank, and CBZ Bank. Right, and the runner-up is FBC Bank. Is FBC, someone from FBC here in the house? Okay, there we go. Thank you. Please give them a round of applause. Notwithstanding a challenging operating environment in 2023, the bank managed to attain a commendable set of financial results. Where was I? Sorry, I always help people up. Total income in the bank increased by double-digit, driven by all revenue streams. Net fee and commission income was impressive, anchored by increased transactional volumes across the various digital delivery channels. Runner-up, FBC Bank. Please, a big round of applause. And the winner for overall best performing bank is Stanbic Bank. Congratulations, Stanbic Bank. Now, of course, anchored on a strong digital footprint, cost discipline, efficient lending, and brand positioning, the bank managed to surpass other financial institutions in key deliverables, namely profitability, efficiency, cash flows, and shareholder value creation. The bank managed a healthy interest income underpinned by uplift in average lending book, with jump by a huge margin, reflecting heightened appetite for foreign currency funding. The bank commands a huge market share in foreign currency-denominated transactions owing to its brand profiling. Foreign shareholder support has ensured favorable credit terms, thereby creating compelling customer demand and preference. The winner, ladies and gentlemen, Stanbic Bank. A big round of applause. Right, we now come to the final award of this morning, and that is the Banker of the Year. Right, this is going to be fun. Now, the nominees are Webster Rusere, FBC Bank. Please, a round of applause. Elisha Chivuri, ZB Bank. Solomon Yanongo, Stanbic Bank. And Gerald Gore, NMB Bank. Now, the winner in this category, this is important, it focused on the bank with the highest average growth in key performance indicators, income statement, balance sheet, and cash flow statements. Right, the winner of Banker of the Year is Elisha Chivuri, ZB Bank. Congratulations, Elisha. It's a great award to win that. Wow, if you look at ZB Bank, of course, top line rose 209%, buttressed by non-funded income and growth in interest income by 29%. Total assets were up 138%. 2.16 trillion ZiG, while the loan book scaled up 220%, driven by increased US dollar-denominated loans. And due to exceptional customer engagement, bank deposits increased by 119%, creating satisfactory capacity for asset creation. The winner of Banker of the Year, Elisha Chivuri, ZB Bank. Well, ladies and gentlemen, that's it. That is the end of the awards. I'd like to please give a big warm round to our guests who gave the awards out. Thank you so much, Pat. Thank you, Deputy Governor. Thank you, Faith. In fact, Faith, let me turn to you. Are you going to do the vote of thanks now? Yeah. All right, so I'll hand over to Faith just to do a vote of thanks before we wind up.
Let me see. Hello, good morning. Maybe before we, Dr. Masha.
We just want to show our appreciation to the good doc for gracing this occasion. Thank you so much. Then I would also like to call upon our panelists, Kelvin, Patience, and Gift. And then Tapera, our sponsor. Good morning once again. Our keynote speaker, the Reserve Bank of Zimbabwe Deputy Governor, Dr. Mashe, First Capital Bank Chief Executive Officer, Tapera Mshoriwa, Alpha Media Holdings CEO, Kenyas Mafukidze, First Capital Bank and Alpha Media Holdings executives and board members here present, ladies and gentlemen. Once again, good morning. It is my distinct honor and privilege to deliver the vote of thanks on behalf of the Zimbabwe Independent and Alpha Media Holdings at this remarkable event, the 2024 Banks and Banking Survey and Awards Ceremony. First and foremost, I extend my heartfelt gratitude
to First Capital Bank, our esteemed partner for 9 consecutive years. Can we give them a round of applause, please? Your continued support and commitment have been instrumental in the success of this annual celebration of excellence in the financial sector. To our award winners, Stanbic, National Building Society, NMB Bank Limited, Stewart Bank, POSB, and the runners-up, we congratulate you. Special applause goes to Mr. Elisha Chubvuri, the CEO of ZB Bank, for being named Bank of the Year. Can we give them a round of applause? This year's theme, weaving through a dynamic liquidity terrain, resonates deeply with the realities of our economy. Despite exchange rate volatilities, a depreciating local currency, and a highly informalized market, Zimbabwe's banks have demonstrated remarkable resilience. Okay. Your ability to maintain stable liquidity conditions, uphold adequate capital buffers, and pursue sustainable profitability is commendable. The strides made in digital, thanks, Robert. Thank you. The strides made in digital innovation, financial inclusion, and environmental governance speak volumes about your commitment to excellence and the pursuit of sustainable finance. The winners today are leading by example, and their efforts to include underserved communities are shaping a brighter future for all Zimbabweans. Our sincere thanks go to ECRO Consulting, their presenter today, Farai Muzondiwa, for providing the insightful survey report that underpins this event. Your diligent analysis highlights the opportunities and challenges facing the sector, offering invaluable guidance for future growth. We express our appreciation to our distinguished guest speakers, Dr. Mashe, Eddie, Patience, Calvin, and Gift. Your perspective have enriched today's discussions. Finally, to every financial institution represented here this morning, we salute your resilience. Thanks to our MC, Andy. You always deliver. We appreciate you. Can we give him a round of applause? Despite the challenges, including cybersecurity threats and climate change-related risks, you continue to support businesses, individuals, and the economy as a whole. Your role in fostering growth and contributing to Zimbabwe's Vision 2030 is indispensable. As we close this morning's proceedings, let us not only celebrate the successes of today, but also renew our collective commitment to excellence, innovation, and inclusivity. Together, we can ensure that Zimbabwe's financial sector remains a cornerstone of economic stability and progress. To conclude, I would like to address a significant challenge we face in the media industry: the quest for sustainability in an environment fraught with economic pressures. Independent media, like the Zimbabwe Independent, plays a pivotal role in informing, educating, and holding stakeholders accountable. However, this critical work requires the backing of partners and corporates like yourselves. We are committed to maintaining our position as Zimbabwe's leading business and financial publication, delivering in-depth analysis, credible reporting, and thought leadership that supports economic progress. Your continued support is not just an investment in journalism, but also in a more informed, transparent, and progressive society. Together, let us champion the sustainability of independent media for the greater good of our nation. Thank you for standing with us. Thank you for standing with us and for your unwavering support. We come to you asking for your support. Without the support of our readers and corporates that advertise with us, we will not be able to keep going. We've got your backs, and we hope that one day you also have ours. Thank you, and may we continue to rise above challenges and strive for greatness. And then I also hope everyone has scanned. Have you all scanned? You have all scanned. The ones that haven't scanned, can you please scan now? Enjoy the rest of the day, and also enjoy your weekend and your Christmas holidays. Have a good day. Thank you.
Thanks. A big round of applause there to Faith Zaba, Zimbabwe Independent editor. If I may ask all the winners and runners-up to please come up to the stage. Can I also ask Tapera, First Capital Bank CEO, Kenyas, please will you come up, and Deputy Governor, is he still here? Please come up. Can I have all the winners and runners-up who got awards today, please come up to the stage for a photo shoot. Thank you. Ladies and gentlemen, while the winners and runners-up are coming up for a photo shoot, I think we've finished right on time. It's 10:55, so it's bang on time. And so from me, Andy Hodges, it's been my greatest pleasure to be with you this morning. So wherever you go, wherever you're doing this weekend or today, please, you all be safe. Thank you very much indeed. Bye-bye now.